This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network, a collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XVX index currently at $44,284. Bitcoin perking up about 0.6% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, just globally as a leader in crypto news, events, and data. So what could be causing that crypto bounce? Well, Federal Reserve officials are preparing to tighten monetary policy on a meeting-by-meeting analysis of data, according to minutes released from their January meeting. In general, the Fed doesn't like to surprise traders, but at one point last week, speculation mounted over a possible intermediate rate hike. That ultimately did not happen. But whether a rate hike happens at next month's policy meeting on March 16th or at a surprise meeting before, the crypto market will likely be affected negatively, according to some analysts. Meanwhile, the United States and NATO see no sign of a Russian military pullback along the Ukraine border, despite Russia insisting it is partially withdrawing troops. Global equities are getting spooked to the downside amid the standoff, crypto markets rebounding from an earlier sell-off.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin traders are preparing for a tumultuous month ahead. Crypto analytics firm Glassnode saying traders are deleveraging because of expected turbulence coming from rate hikes and potential conflict escalation in Ukraine and Russia. Traders are feeling the pressure. When taking a look at this Glassnode chart, we want to pay attention to the orange line in the middle there, showing total futures open interest declining from 2% to about 1.75% of Bitcoin's market cap. Glassnode saying there's been a notable deleveraging across futures markets this week as traders opt to close out their futures positions rather than risk forced liquidations from volatile pricing. The market appears to be de-risking and curtailing leverage in response to all the macro uncertainties out there. Finally, Glassnode also notes there's a remarkably resilient cohort of hodlers, that is, investors holding onto their Bitcoin despite volatile market swings. The supply of Bitcoin held by long-term holders continues to stay stable. All right, joining us now to discuss Bitcoin and more is CoinDesk markets analyst Damanick Dantes in New York. Hello there, Damanick. Thanks for joining us. So, would love to hear your reaction to the latest minutes from the Federal Reserve's January meeting and its impact on price. Is that why we're seeing perhaps a bit of a rebound?
Yeah, I mean, it was no surprise, right? Nothing really there. But I think traders are looking forward to March, and that would be the pending rate hikes, probably about 50 basis points or so. A lot of that's already priced in risk markets, equities as well. We're seeing sort of from the Treasury market, at least, traders are expecting the yield curve to invert within 6 months to a year. And typically within 6 to 12 months after that, you expect a recession. So we're in this sort of slow growth environment. And I think that's kind of a headwind for risk assets. And then also it's not just a rate hike, right? It's the phasing out of the balance sheet. And typically when money supply decreases and you get some of that tightening, that tends to drain liquidity from the markets. And that could be also another headwind for risk assets. But right now, because all of that's kind of priced in and we've been in this range-bound moment, there's been a reduction in leverage. What happens then, it tends to benefit very short-term traders. So we're seeing some of the positive moves on intraday charts at least. And hopefully, we'll see if that's sustained in the days ahead.
How do you see Bitcoin reacting to all the geopolitical risk out there with conflicts, geopolitical tensions rising along the Ukraine-Russia border?
Yeah, that's created a lot of chop in the charts. We saw the sell-off on, Friday? We kind of dipped below 43K in Bitcoin. And then Monday, it was kind of like an about face, and Tuesday at least too, where Russia was sort of still being active on the ground, according to NATO officials today. And then the prior days, we heard like there was some sort of de-escalation. So it's been very, very confusing for a lot of analysts and traders, and we're seeing that reacting in the price. But overall, we saw that the traditional safe havens like gold, the dollar were bid up during the geopolitical tensions, and now they're kind of pulling back. So it's been a tit for tat, and the market's just kind of trying to reconcile that. But overall, we've seen the correlations rise between equities and crypto. So it's showing that there is some reaction to the geopolitical risks.
Yeah, there's a lot of choppiness out there. Traders must love that volatility. I see that you have for us a Bitcoin dominance chart. Tell us what your analysis is of Bitcoin dominance.
Yeah, so that chart just shows the Bitcoin's market cap relative to the total crypto market cap. So typically, when that Bitcoin dominance ratio declines, like what we saw most of the way through 2021, that's when altcoins were very much in favor, and it indicates that there was still appetite for risk because altcoins have a higher risk profile relative to Bitcoin. So Bitcoin is kind of seen as a safe haven within the crypto space. However, that ratio kind of flatlined or stabilized between May and September of this year, and then heading into September of last year, sorry, and heading into this year, that ratio started to pick up a bit. And that shows some fear on uncertainty in the market. Traders tend to rotate back to Bitcoin and abandon some of the altcoins just to reduce some risk. And that's consistent with the leverage reduction that we're seeing in the futures market. So there has been some caution. My area of concern is that ratio is now a little bit above the 2018 lows. And if you remember 2018, we had that bear market, which was also when we had the taper tantrum. And that showed that the Bitcoin ratio tended to dominate then as traders reduced risk, and it was sort of a down market. So there was risk that move up can be sustained, and that would be pretty negative.
So let's look at the sentiment out there. Bitcoin Fear and Greed Index. Tell me, what are we seeing over on that side? It's rising.
Yeah, that measures sentiment in the market. Then the Fear and Greed Index has risen from the extreme lows like what we saw in January. So the sell-off obviously created some fear in the market. And that was very similar to what we saw during last year's correction. If you can see on that chart, around 10 to 20 was that low range, and we kind of were around that recently. That pickup was consistent with the latest price jump that we saw. However, the latest reading dipped back into 46, which is in fear territory. And that's the reaction, again, to the geopolitical risk, some of the uncertainty regarding macro. And if you remember, like back in 2018, this ratio can fluctuate very wildly between fear and greed very quickly. So it's not a sort of smooth indicator. It's very kind of erratic, especially during times of uncertainty. So it's less timely than what we saw in the previous year. But it's something to monitor for short-term traders, at least within a downtrending market.
And Damanick, you are our CoinDesk expert technician. So in the short term, where do you see Bitcoin support and resistance?
So support right now, minor is around 40K. When I say minor, it just means that it's very short-term in nature. But then just stronger support back around 35K, which was where the recent local low was on the chart. 30K is pretty much that stop point at least. And then resistance has been pretty strong around 46K. There is that potential of maybe 50 to 51, but upside seems very, very limited for now. Long-term indicators like long-term momentum has dipped negative on the monthly chart, and that's very concerning. But over the short term, we might see some chop, but within that range of 40 to 46 is what I'm watching.
All right, Damanick, awesome. Thank you for your analysis. That was CoinDesk Markets analyst Damanick Dantes in New York. All right, coming up, more Bitcoin analysis with crypto investment firm Osprey Funds. Welcome back. Heading up north, the Ontario Provincial Police and Royal Canadian Mounted Police ordering all regulated financial firms to cease facilitating transactions from 34 crypto wallets tied to funding trucker-led protests of COVID restrictions in Canada. The protests are now deemed illegal under the Emergencies Act invoked by Canadian Prime Minister Justin Trudeau. The wallets consist of 29 Bitcoin addresses, as well as Ethereum, Litecoin, Monero, and Cardano addresses, among others. Donors have sent more than 20 BTC to the addresses, almost $900,000 after their GoFundMe account was suspended. And earlier, I had a chance to speak with Colorado Governor Jared Polis on how they're accepting Bitcoin and other cryptocurrencies for payments. Have a listen.
Another relatively new announcement is we will be accepting crypto for paying state taxes and other transactions with the state by the end of summer. So we're really excited to move that along.
For my full interview with Governor Polis, check out CoinDesk.com/video. And finally, Berkshire Hathaway investing $1 billion in Brazilian digital bank Nubank and reducing positions in MasterCard and Visa. The share purchase was made in the last quarter of 2021, according to an SEC filing. Although Nubank does not allow trading in cryptocurrencies, its investment unit allows users to invest in crypto exchange-traded funds. In 2018, Berkshire Hathaway CEO Warren Buffett declared his dislike of Bitcoin, calling it, quote, rat poison squared. All right, things change. Joining us now to discuss Bitcoin and more is Greg King, founder and CEO of Osprey Funds. Hello there, Greg. Thanks for coming on. So again, we're a lot of headlines out there. You know, some catalysts, some headwinds, some tailwinds. But I wonder, we've been seeing a lot of choppiness in Bitcoin. It was down this morning. Now it's a bit of a rebound. What's your assessment of what's happening?
Yeah, a lot of chop. I agree with your analyst. It's sort of range bound right now, and to a certain extent, that makes sense, right? Bitcoin is not a dividend producing asset. So in the case where rates are going up, you're going to see those assets marked down, right? But at the same time, it is sort of like this digital, real asset. And when you see potential for inflation, you're going to see those assets like gold go up. So I think there are countervailing trends kind of vying for dominance, excuse the pun, within Bitcoin itself. And we see this, continuing for a little while as, what the Fed is going to do and, whether or not Ukraine is happening is still out there as uncertainties.
Well, we just had the Federal Reserve release their January minutes. And as the markets digest this news, how do you see things playing out with the geopolitical risk out there on top of it all?
It's definitely, an uncertain environment. I think the whole Ukraine thing, people don't know what to make of that, and it's uncertain as to what kind of geopolitical games are being played or not. I think at the end of the day, our focus is more on the mid to long term, and the recent drawdown in early 2022 was a good buying opportunity, we feel, for long term investors in Bitcoin. All the on-ramps are still being built. You have institutions still caring about what's going on. And so in the short term, it's hard to predict, is it going to bounce off of 46K to the upside or off of 40K on the downside? But long term, we think it's below trend. So we're still very bullish.
What do you see as some of the tailwinds, the cows, to get us out of somewhat of a bear market?
I think you have to get through this Fed cycle, or at least get a little more, meat on the bone in terms of what they're actually going to do and when they're going to do it. I'm not sure the market has it priced in accurately in terms of the number of rate hikes. I personally don't see how you could hike that many times, although with the inflation numbers we're seeing, traditional finance would say you sort of have to. I think in the balance, though, the factors that are pushing people towards real assets, digital assets, even gold, real estate, these inflationary pressures are going to continue. And so I think that as far as the timing goes, maybe sometime later in Q2, I'm not sure. But second half of the year, I could see that kind of clearing the way for the next run up with Bitcoin.
And in your conversations with institutional investors, how are they positioning themselves in this sideways market?
Well, as far as Bitcoin goes, I think that due diligence processes are still rolling forward. around year end and in January, with the drawdowns in crypto markets just generally and turbulence in other markets, those processes have slowed down in some cases. But we really haven't seen people just throwing out the baby with the bathwater and saying, I had thought this was a good idea, never mind. That doesn't seem to be happening at all. In fact, institutions tend to sort of bide their time and start to leg in times of sideways movement, because I think they feel like in that case they're not really chasing a bullish market that's running away from them, nor are they trying to catch a falling knife. So sideways markets can actually be good for institutional investor allocations.
Greg, if you were to look into your crystal ball at the end of the year, where do you see Bitcoin?
I put the ball away a long time ago, but we think that Bitcoin will be higher at the end of the year. I won't give you a price target, but we definitely think it will be higher. And 3 to 5 years down the road, we think it'll be very significantly higher.
Okay, Greg, thanks for your insights. Appreciate you coming on the show. That was Osprey Funds founder and CEO, Greg King. All right, that's it for All About Bitcoin. I'm your host, Christine Lee, and Bitcoiners, don't hate me, but this time tomorrow, we are debuting here on CoinDesk TV All About ETH. We're here in Denver for the ETH Dev Conference, so check us out. Also say hello to me if you're in the area. Also join us tomorrow morning at 9 a.m. for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.